BNB Binance coin is ripe to go below $300 for a nice low capital exposure short trade setup. We've been following Binance coin now for 12 days. Today is day number 12, and we're following it day by day how it's unfolding. We did some really good trades, made a good profit, but now we're going to look at yesterday's trade setup. Have we been entered into it, or is it still moving sideways where the entry position is still valid? We're going to look at that. Will it work out? We don't know. It's probabilities, never certainties, and that's the name of the game. So like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So we are going to dive into day number 12 with Binance Coin. Let's dive in. All right, so actually, let's go to the YouTube video yesterday. So what we said yesterday with YouTube on day 11. So we're literally following this day by day. It said, look, it looks like a B, C correction. We had reasons to believe, and I covered this in yesterday's video, that if the market goes below this low, that's a good short trade position with the stop loss up here. Stop loss up here. So why would we do such a thing? Well, this represents 3% risk, 3% of your whole account size. So it's 3%. And if we get triggered into the trade and the market then moves against us, well, then we lose 3%. But if it goes on to do what we want to do and what we anticipate, we have an insurance policy, we're going to have an early exit, and then we're going to have a profit-taking position as well where we're looking to ride the whole wave. So now let's jump into a live chart with Binance Coin. So we can see that there's been a few more day bars. So we're on a 4-hour chart. So what that means is, if you're not used to looking at charts, each one of these bars represents 4 hours of price movement. The bar itself, you see this little line on the left, that's the open. The wick, or the size of the bar, the high to the low, is the price movement from the lowest point to the highest point in that 4-hour period. And then the little marker on the right-hand side is the closing price of that 4-hour bar. And then the next bar opens, and so on and so forth. So we were around here yesterday, give or take, on yesterday's video, and we had around 5 or 6 more bars. So it's been a day. 4-hour chart is 6 bars every single day. So we can see that this low has not been exceeded yet. So the trade has not been triggered. So what we're going to look at today is the trade still valid, or do we need to remove the order? Is there any reason that we should think anything different from what we're seeing right now? So what we're going to do first, and by the way, what we're using is Elliott Waves and Fibonacci. Elliott Wave is the pattern position of the psychology of buying and selling. So this tells us, is the market in a correction, which would tell us valuable information, or is it likely that is in an impulsive wave sequence? That's important to know. And then we're going to use some Fibonacci price and time to see what's likely to occur. So when you see all of these lines over here, we covered this in the last few days, these horizontal lines are Fibonacci price targets, and we're in this Fibonacci price zone. One of the reasons we thought this is a high probability wave C of a wave 2. And then these horizontal lines, these vertical lines are Fibonacci time. And that tells us we're in this particular time zone, which tells us it's likely that we've seen a top, not guaranteed, but this will be a major signal that this top will hold, and then we're going to enter into the trade in itself. So if you want to learn a bit more about Fibonacci Elliott Waves, I have a masterclass. It's in the link below. It gives you all the information that you need to know. Very, very valuable, especially if you're doing this. Follow me. We're on day 12 today. So let's now just jump out of this chart for a second and go back into a daily chart. I'll keep my daily chart in the top right-hand corner. I've just got the stochastics RSI, the momentum. So momentum, there's many momentum indicators. In fact, there's thousands of them, literally thousands of them. I personally like the stochastics RSI. What we've seen from yesterday is, it was approximately here, the stochastics RSI, but now it's entering into what's called the overbought zone. So this blue line, which is also referred to as the fast line, is now above this black line. That tells us it's in the overbought zone. That tells us that we should anticipate a top being made over the next 1 or 2 days. Now, pattern and price overrides momentum. Ideally, you want the momentum, pattern, price, and time all saying the same thing, but pattern and price overrides momentum. That's important to know because we discussed that over the last few days. So now let's just jump back into the 4-hour chart. I'll keep that into the bottom left. So the bottom left, this is the chart over here. I'm going to pull up an indicator, and what we'll see is something really, really important. Really, really important. I'm just going to magnify it like so. What do you see with this momentum? Well, there's a couple of things. One, we want to be aware that it's reached the oversold zone. So we want to be aware of this. But there's something else that you want to be aware of, and that is something called bearish divergence. Bearish divergence. What does that mean? Well, the momentum is from here to here moving downward in terms of, you can see the rate of change is moving downward, but the price from here to here in the same pivot points has been moving up. So what that tells us is that the buying power is reducing and it's looking like the sellers are coming in. That's what divergence, bearish divergence tells us. That can be very valuable information and support our case. Also, it's important to know what the other indicators are doing. So I normally look at two main ones, which are two different look-back periods. What that means in English is one of them is pointing down clearly. The other one is still pointing down, but is in the oversold zone. So we just want to be aware of this. Now, depending on your trade plan, your risk tolerance, what you're doing, there's a few different factors, and everyone's trade plan would normally be slightly different. For my trade plan, this still qualifies as a valid trade setup because the pattern position and time is so strong. It's a very clean A, B, C setup. We've got our 1, 2, 3, 4, 5. And if we look at these swing lows, none of these have been exceeded yet. So if we just draw this out like so, if we go, okay, this swing low, the price has not gone below this. This next swing low, the price has not gone below this. And then our entry is on this swing low over here. Price going below a swing low is one of the first signals, not confirmation, signals that this top is going to hold, likely to hold. So we're doing probabilities and never certainties. Another thing to take into account is the overlap. So wave A, the closing price of wave A and the peak of wave A is also very close to our entry point. So if the price also goes into the range of wave A, that's an even stronger signal than this swing low, and that will give us extra confirmation that is highly probable, not guaranteed, that this high is going to hold. But what's the ultimate confirmation? It's actually taking out this wave B swing low. So if the price goes below this wave B swing low over here, that'll give us a lot of confidence to say this wave C top, where our stop loss is, or going to be, if we get triggered down here, will hold. So now what we're going to finish on today is, it hasn't been triggered yet. So it's currently 8 a.m. or 8:45 a.m. UK time at the moment. Live data, we're literally doing day 12, today's day 12, or follow me on Binance Coin day by day, and the data is literally unfolding. If we get triggered, let's just say the price does trigger us over here and we enter into the trade. The order's in play already, so we don't need to do any action. We don't need to change anything. Here's our stop loss, and then here's our entry point. So you see I'm only looking at the chart once a day, by the way, just so you're clear. We're looking at the chart once a day. So I haven't looked at this chart since yesterday. So it's been a 24-hour period, and I'm just opening the chart to see, is there any action required? That is brilliant practice, because if you're watching the chart throughout the whole day and you're seeing the prices go up and down, you're going to make bad decisions. It's very emotional, especially with those platforms that are flashy. You see these lot of platforms that are flashing, Binance Coin is up 5% or is down 10%, is up. You want to ignore all of that stuff, eradicate that out of your life, and just when you're looking at the chart, 5, 10, 15 minutes in the morning or in the evening, your time of day, we just check, is there any action that's required? So for us, based on what we did yesterday, there's no action required. But I am going to just add some additional information for your personal education. All right, there's two things. One, we're going to do a bit of price analysis, time analysis. Okay, if we get triggered into the trade, let's just assume that we get triggered and the price does this. So then we're entered into the trade. This might happen, it might not happen. We don't know. There's probabilities, never certainties. We don't have control over that information. But let me just delete some of these lines. I know there's a lot of lines on the chart. I was going to delete some stuff. That's fine. So what we're going to do is what is the price and time expectation? So we're going to have two positions. So the order that I have in play is two positions. We're risking 3%. 1.5% is our insurance position, and the other 1.5% is our profit position. And what I mean by that is we want to always assume that we're wrong, but we want to ask the question, what should the market do as a minimum more often than not if we're wrong? So if we're wrong, the market more often than not would normally do this. It will replicate this wave over here. And what we're going to do is just a time analysis. We're just going to measure how long did this wave to the downside take. And we're just going to project it forward from what looks like to be a potential high over here. It might end up being over here. I think it's a double top. Let me just double check the price. I think it was a fraction higher over here. So this is actually the high over here. It's a fraction higher. Yeah, it's just a fraction higher. So this is the current high. I'm just going to click it from over here. So the minimum expectation is by the 3rd of June, 4 a.m., we expect the price to, if we get triggered in, it might be before, it might be slightly after, but it just gives us an indicative feel. The price we anticipate to go to $277. Now, if there's a pattern position over here, we will look to exit half of our position in this region in a logical, mechanical, objective manner, which will ideally mean that our stop losses ideally will be moving to risk-free if it allows us to do so, and we'll lock in some short-term profits. But then on our second position, we're going to ask the question, okay, if it unfolds as anticipated as a wave 3, well, a wave 3 in time is 1.618, and the price of a wave 3 is actually down here. This is what we anticipate for a wave 3. And we're not going to do it as a fixed point. We're going to do something called a trailing stop loss. We did this in our earlier position with BNB when we entered the trade up here, and we trailed the stop loss, and then we trailed the stop loss, and we made a pretty decent profit. And then the market moved against us, and now we're waiting for a potential another setup, which we've put our order in as well. So then we're anticipating that the market is going to go below $255 and maybe much lower. We don't know how low, but we've got a potential wave 1, wave 2, and a wave 3. So this will be the minimum expectation. I call this the insurance policy, the insurance position, where we want to take relatively quick profits in a logical manner. We want to get stopped out in a logical manner, a couple of days. And then here, we're going to allow for the larger degree move. And we might find it overextends often to the 2.618. So we might find the price going down to here. And then again, we'll just be patient for the market to unfold. So it's important to know what we know, but also it's important to know what we don't know. So what do we know? Well, what we know is Elliott Wave patterns, how markets typically unfold. We know if the market goes below this swing low, then this high has a high probability of holding. We know our risk exposure, our capital exposure is 3%. We know our trade management, our business plan for half of our position, and then for the second half of our position. What don't we know? We don't know how this is going to unfold. There's no way of knowing. There's literally no way of knowing. Hence, we risk 3%, a small amount of risk to make a large amount of profit, a potential profit. But we also know if we're wrong and we get triggered into the trade and it moves against us straight away, we lose 3% of our portfolio. And that's just the business of trading. And taking a loss is the cost of doing business in this game. So what I'm going to highly recommend you do, if you're following me on this, we're in day 12 today, follow me on BNB, take the Fibonacci Elliott Wave Masterclass. It will really give you a high level of Elliott Waves, how to really marry up Fibonacci price, because we cover wave 3s in the Masterclass. We cover ABC corrections in the Masterclass, and that's really, really relevant to what we're seeing right now. And if you can marry that up, when you're looking at any chart, you'll see 50 to 70% of the time, these patterns become clearer and clearer and clearer. And then you'll start to make logical sense of the psychological buying and selling behavior of all markets, especially cryptocurrency. And we're seeing that in front of us day by day unfold. And will it unfold to the downside? We don't know that. But we've got our entry point, we got our stop loss, and we got our expectation. but we also are prepared to take a 3% loss to find out if we're right. If we're right, great, we'll execute our insurance policy, and then we'll execute our profit wave trade, or the second unit, I call it. If we're wrong, we take a 3% loss. And then it's just rinse and repeat, rinse and repeat, rinse and repeat. So you're just playing a high probability hand again and again and again. We're looking for momentum, pattern, price, and Fibonacci time. By the way, I'm working really hard on a Fibonacci time masterclass and a whole course. So hopefully that's going to be launching very, very soon. So watch this space for that. So if you like today's content, like, subscribe, hit the bell notification. It means a lot to me when you kind of give the feedback with just a simple like, if you're getting value from this, because we're really going into detail now. We're not doing high level. We're going into, right, what's the exact thing that we're looking at right now, and what would be a first signal to give that validity, like it's going to make it a valid entry point, and what will void it, which means, okay, now we need to stand aside and wait patiently for the next high probability setup. All right, let's finish on a quote I've got on for you. It's chapter 5 today. Chapter 5 is Leonardo da Vinci. Simplicity is the ultimate sophistication. Now, my charts, tend to be much less cluttered than most because I only use momentum. Stochastic RSI is my favorite because it's very obvious. The blue line crossing over the red, you just have to get the settings right. So momentum, got pattern. Elliott Waves is my absolute favorite. I know there's head and shoulders, cup and handles, there's flags, there's bull flags, bear flags, there's trend lines, reversal lines, there's parallel channels, X, Y, Z. They can all be very, very valuable, but I like to keep things really, really simple. And I found Elliott Waves to be one of the best ways, especially if you've got 2 or more degrees of counts. Fibonacci price, I value much more than support and resistance line, but they tend to coincide more often than not anyway. So Fibonacci price, especially on 2 degrees, we've got retracements and alternate price projections, or also called extensions, and there's a few other things as well. And then adding in Fibonacci time, if you can know the typical time taken for corrections, typical rhythm zones, and so on and so forth, when 3 out of the 4 are coincide, or 4 out of 4 coincide, that gives you real valuable information from a technical position on giving a logical entry point. So simplicity is the ultimate sophistication, but the strategies are very sophisticated because we're reading the market psychology, the psychological mood of the buying and selling behavior, short term, medium term, and long term, and we're looking for the trends. And we're going to ride the trend. So the trend is your friend. Ride it until its end, until it reaches its bend, and we believe we've got a good amount of downside below $300 and maybe even towards the $200 mark for BNB. Is it going to unfold? We cannot say. We cannot say. Anyone says that it knows that's going to happen is a fool. So if you think I'm saying it's definitely going to happen, no, that's not what I'm saying. Probability is never certainties based on momentum, pattern, price, and time. So there's a very high probability setup. We also looked at some momentum divergence and price divergence, where the momentum's going down and the price is going up. That also gives us valuable information. And now it's a case of just putting in an order, stop loss, 3% risk, standard back, and let the market do what we're going to do. Give it another 24-hour period before we're going to look at the chart, because there's not going to be really anything else that we need to do other than just wait. And if it unfolds, then we manage the position. If we get stopped out, we then manage that as well. If we get triggered into the trade and it's just a running profit and it hasn't really moved to the downside, we'll have logical judgments based on technical positions, momentum, and a few other factors as well. So if you like today's content, like, subscribe, hit the bell notification. Today was day number 12 of Binance Coin. Join me tomorrow for day number 13, where we're going to look at, did we get triggered and how is it unfolding? And then we'll just manage the position in a non-emotional way, in a business-like fashion. And in any business, you have to make decisions, and we want to make our decisions based on logic and probability. All right, like, subscribe, hit the bell notification, and I'll see you tomorrow for day number 13. See you soon.